Welcome, everyone. We will call to order the May 1st, 2025 meeting of the Montgomery County Employee Retirement Board. I will ask, who do I ask now? I'll ask our Deputy COO, Stephanie Tipton, to lead us in the Pledge of Allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
The number one power of the chair. Do we have any public comment? Yes, okay, do not. Moved, is there a motion to approve the March 6th, 2025 meeting minutes, for the retirement board?
So moved.
Moved by Commissioner Weiner, is there a second? Moved by Treasurer Salas. Any one comment? Any all in favor?
Aye.
Aye, the minutes are approved. Next, we'll hear from our CFO on retirement plan updates.
Yeah, just a few updates before I turn it over to Stephanie. So the actuarial report will be completed in the month ahead. So it's something that we have to leave, you know, in July. We have that plans funded as
Mhm.
actually it's budget, which is roughly $31 million annualized. We have that prorated situation is made.
Mhm.
If that's what it see how that. We do have a consent. That's going to be at 2:30. Basically, calculating this will be the original review of asset allocation, which they do. We have that. That's going to be here. Over here. We'll also have a Zoom up too. So
Yes. Thanks. Welcome.
Although we have to be able that we can have research on the quarter, so I have additional information from the
Okay.
Did I get a copy? Did I get a copy? Thank you. I feel bad for Mary.
No, good, we're good.
You have handwritten notes here.
Nothing in there. So you'll see I have April 24th information in there, and then I brought actually fresh. I thought the books where we ended the last April, so certainly been very interesting. It's just Friday, the executive summary, you see the portfolio went down. I've given up lately for the first quarter. We did have gains. It was still a very balanced quarter. If you look at the executive summary here, a number of factors were at play. So your equity for the total time and the very long time were negative. If you remember when I spoke last quarter, I think it's just so interesting to think about the slides that I showed you. I don't remember there were analyst slides of, projecting where the S&P would be here, and the majority of them were 20%.
Yeah.
You know, we were kind of more conservative, but the year started really strong. There was lots of optimism about tax cuts and regulation, and just really good, strong consumer. And we saw That's really is one about face, and really what would happen in the equity market with significant rotation. And I think it's really key to diversification. There's a number of things happening. One is international, creating new models in the US. So we talked about that, we've been showing
Mhm.
parts of it's 8 out of the last 10 calendar years that the US has been international. Again, S&P 500 of the last 2 years. Over 25%. So what we saw for the first quarter is international. We also saw rotation of consumer discretionary defensive names do better. If you remember Magnificent Seven, those rogue AI names have been leading pretty much large cap in the last 2 years. So we saw a big shift there. So it's been a number of shifts. And again, when you think about, I had a client that I visited last year and they're like, not even international in the US market so well. So this really speaks to why you have exposure to all those classes. But when we look at your portfolio for the first quarter, your equities were down just very slightly. The good news is, second bullet point there, you can see your fixed income, which, really provided the job that it's meant to be in the portfolio. It's your fixed, it's your risk management. That was up 2% for the quarter. And what you saw there is bond yields down. If they wrote, if you remember the fourth quarter, price of Edwards are playing at times, also yields down. So your core fixed income, even other assets that we added to the portfolio last year, they're very beneficial. So recall we added high yield debt, emerging market debt, and they were beneficial for the portfolio. And then finally, your alternatives, they continue to add value. They are meant to provide, more diversification beyond the public activities, providing differentiate the return. And you can see here, they're wondering numbers as well. 15%, and then your structure part about that. They continue to add value. You can see them right here, there's been every day, so I mean, I know it's very long, but they got trained for March, it's happening. You can see here when I use the box, your April return to portfolio is down about 1.5%, which we brought your year-to-date return down about 85%, and you can see that was effective given the S&P 500 was down 8% at that time. So that really speaks again to diversification within a number of these asset classes. The good news is the report today through the end of April was positive for the month and for the year. So the April, and that's not in here. I got these numbers this morning. Your April monthly performance was positive 0.45%, and the year-to-date is about that. So it really speaks to, again, these volatile markets, and we could certainly talk about it. I think that, to sum it up the best, when you're going through this every day, uncertainty is really what's driving the markets. When we saw in February, I think the S&P 500 was down almost 20%, with a couple of them down 11%. And it's really been all diversified. And you're all probably, if you're looking at your own personal portfolios or 401k plans, what have you, it's certainly there was a whole crazy market. But when we look at, the quarter, and we look at the fundamentals, we were very strong. We had, even though we had negative GDP, we worked on that yesterday. Prior to that, commercial spending, economy is strong, companies are doing well. But what you see happening is all this uncertainty is the CEOs, you can see a number of CEOs are coming out with, United Airlines came out with 2 guidance numbers. They basically said we're going to have a recession or not. So here's our outlook. But many executives are withholding where they're going to sit. And what that does, it leads to, do they fire employees, do they cut spending? Same thing for consumers. We're all, if I make that purchase, do I go on vacation? So we're seeing airlines kind of, restrict their guidance as well. And the unfortunate part is that uncertainty can lead to downward growth within the marketplace. So again, it's kind of, as we continue to move forward, it's getting some information about a number of these policies and where they stand. Because you think about this is a downward market that's based upon policy. When you think about other downward trends, now the chart here, some of them will get. I think there's a number of things as the market keeps finding more clarity as we go forward. Again, our projection is we're not going to have a recession, but there's more to come. We can talk about that. So, any questions on the executive summary? Market. This just shows, you're all familiar with that, Sean, we briefed about it. This just shows the market that comes for the quarter. Again, you have all asset classes covered here. And you can see for the first time in a long time, we've seen negative return. You can see US large cap is down, small, really challenged. You can see small cap was down almost 10%. Continues to be challenged even in April. When you think about local companies, they're very sensitive to interest rates, they're very sensitive to how the consumer is reacting. So you're really seeing a number of those companies get pulled downward, especially in the first quarter, and it continues for April. But again, I mentioned before, look at international, you can see world equity and emerging markets are very positive. And there's a number of things that happen there. Number one, we saw the U.S. put some more pressure on your countries to start spending more in their defense. So we saw areas like Germany start spending more and providing stimulus. Even China started providing stimulus. So you see the reversal. And when I look at your portfolio for the month of April, it continues to be your international and emerging market exposure that really benefits this portfolio. And we've also seen the dollar decline, which I think is surprising. We've had years of a really strong dollar, and now we're seeing, I think, the dollar decline 8% already. So we're seeing that benefit when you do that translation. That's really helping in international. But if we continue down the page, your fixed income areas continue to add value. Your core fixed income, which is your primary risk management investment grade bonds there. You can see that was up about 2.7 quarter, continues to add value. And then finally, the high yield and emerging market debt, two asset classes that we have, we continue to provide benefit there. Emerging market debt, actually, which are highest performing fixed income. And then finally, what I think is very interesting is when you look at commodities and inflation rates, there's been lots of conversation about inflation, but we have a fund within your portfolio that has exposure to commodities, and we see areas like gold, fall through copper doing exceedingly well. So this benefited your portfolio, and you see commodities with almost 9% for the quarter. So again, it really speaks to the value of having it broken. On the next slide, I won't cover much. You're familiar with this. This just really reflects, it's hard to see here, but the yield curve pretty much dropped throughout the quarter. We started that line, that dark line at the top is where we started at the beginning of the year, and you can see that blue line was really where the quarter ended. And for most durations, yields have come down. What we've seen for April, significant volatility, especially with the 10-year going up and coming back down. They all balance for the yield curve. And then on the right here, just spreads. You can see they widened in a little bit for the first time. They were very steady, but still providing yield within the portfolio. The next slide, this is our summary views and our perspective, given uncertainties. So I think when you look at what's most important, and we said that we're going to look at your asset allocation. So for a few reasons. Number one, we do it annually as your fiduciary partner. We're looking at your asset allocation meeting last year. If you recall, we pushed some active funds, we your alternatives a little bit. So number one, we're just looking at it on an annual basis. Is it going to continue to satisfy the goals? I know you want to look at cost of living increases. We want to make sure we have the right asset allocation to give you a return, but we also want to make sure that we're being reflective of our point of view. And a lot of that actually happens beneath the surface. So, our response to everyone during these volatile times, don't make changes, don't react, don't try to chase the market. So obviously you think that's common sense, but within your portfolios, you have managers that have been very active, looking at securities, looking at opportunities. Some of them have traveled in meetings that have been down. Even some of the Magnificent Seven, because it's an opportunity that they see value. It's interesting. I don't know if you all heard that they said retail investors for the first time put in billions of dollars into the equity market. So usually you see the retail investor running scared and selling. And this, for the first quarter, they actually, or the last month, they saw retail investors pretty much fine, which I thought was very interesting. But our summary views are listed on this page. We continue to think inflation is biased to the upside. Even we felt this way even before some concerns about trade war and fiscal stimulus, but we continue to believe that. We do see growth data softening. You saw we had a negative GDP report. A big part of that report, if you kind of look beneath the surface, was due to significant shorts. I think a lot of organizations are front running whether that be buying auto or inventory, just to prevent the tariffs. So imports, that took up about 4 percentage points, all those imports. So some of the information beneath the surface on GDP is still strong, but it does provide some concerns as we look forward. But right now, we're just in a shit like that. Again, we believe commodities is still in attractive competition and inflation hedge, and that is in the final, which I'll speak about in a little bit. And our risk asset view is to neutral with diversification across all areas of risk. And then I'll skip over the next two, but I do want to draw your attention to the strategic allocation box here on the right. If you look at all of these, housing crisis, COVID, great financial crisis, all of these we remember very well. And they are all areas where, there was lots of unknowns. Even think about COVID. I think the S&P 500 dropped 35% during COVID. But if you look at this time period from 2008 till April of 2025, the S&P earned annualized 9.7%. So this really speaks to the nature of, we've been through difficult markets like this before. It's true to say your strategic asset allocation, and it's important that we keep that in perspective as we look through this. I'm happy to report that we still have a positive return in April, even year to date. This I won't go through, but this just speaks to being good fiduciaries of your plan. This is us saying what do you do at this time? We're looking at your investment policy statement, we're rebalancing on your behalf. All of our funds have a tolerance of 2% plus or minus. So if the equity markets go down, we're buying it back into it. Get them back to target. And then obviously the most important thing is making sure that your goals are still the same, and we reinforce that with the rest of the allocation, which we're going to do on your session. And I will skip over the rest and let's jump to the portfolio and see if there are any questions on the component. Here, the year-to-date, your portfolio was positive 0.70 as reflected in the executive summary. The 1-year number 7.5, and just to remind you, if you look at calendar year, your portfolio was up 11% last year and 16% the year before. So 2 years of really strong calendar, double digits. Hopefully we are able to say we're going to have a positive year ahead. So as we look at some of the contributions to that return, small as it may be for the year to date, you can see the U.S. equity market I was the biggest detractor. You can see that was down about 4%, and that contains your large cap and small cap. And you saw small cap got hit pretty hard. Global equity on the reverse, positive 5.5%. And again, we talked about a lot of the areas such as Germany and China really contributing, and for the first time leading the U.S. in a number of percentage points. Your fixed income, you can see it's top line there, responsible for over 2% return for the portfolio. Your limited duration is a shorter duration, continues to provide value, but your core fixed income, which is a large percentage of your allocation, was up almost 3%. And then your high yield bond fund contributing just under 1%. If you look at the contribution from high yield, that was up over 80% for the 1-year portfolio. And all of these funds are active, so they meet their benchmark, which provides additional return for the portfolio. See your alternative funds, your structured credit, and your special credit fund. We just moved those up to the portfolio and the 1-year 70%. And then finally, your dynamic asset allocation fund. I think it's interesting when you look at this, you can see that particular fund was down 2.98% for the first quarter. But if you look at the benchmark, it was down 4.27. So you've got an extra, it provided some risk management. And if you remember, that's the fund where we implement a lot of our points of view. We have commodities exposure in there. We have a number of trades that anticipate higher inflation. We have a steepening yield curve. So this allows SEI to implement some of our short-term points of view, and that protected you. So that's benchmarked to an S&P 500. So even though it was negative, it still benefited the portfolio because it wasn't down as dramatically as the S&P 500. And then the next slide just shows your calendar, as I mentioned before, 11% return for 2024 and 2013. So 2 strong years of growth within the portfolio. And again, I think that the consensus is, if we get a little more certainty within the marketplace, that will certainly help. We've had a strong run. The market's been up 6 days in a row, 6-7 days in a row. And we've seen that positivity as we ended April. Believe it or not, yes, it was only down, less than 1% for the month of April. And it didn't really feel like that a couple weeks ago. So it's really going to be a matter of its continued certainty and trade agreements as we go forward. And many businesses across the board who are impacted. I saw that, trade, shipments and ports were down about 30% in China. There's even some numbers close to 60%. So the fear here that we're afraid of, I think many businesses are afraid of, are we going to see supplies like now and have concerns over that? So it really becomes an inventory question at this point. And again, a lot of people are kind of frozen and on hold until there's more clarity in how they operate their businesses. Tomorrow is a jobs report number. So if you think about the Federal Reserve and their job, they have two goals. One, their goal is to keep inflation in check. And if that's going up, they can't really cut interest rates right now. And that's what I think the marketplace is looking for the Fed to come in and do that. Their other job is really to keep stable employment. And we'll see tomorrow what that looks like. I think a lot of the reports that you're seeing right now are still okay because a lot of it really hasn't implemented yet. So we haven't seen companies being very significant laying off, although UPS announced they were laying off a significant number of employees. But I think the real test will be as we move forward in the next month, how are companies reacting with laying off employees and what are they doing to kind of save money and provide that risk management until there's more clarity in what's happening. So there are issues that we'll be looking at. So I think if we have a weak employment report, many may think the Federal Reserve may cut rates next time they meet, but I think their hands are tied right now in a very difficult position because inflation is still remaining high. So again, very
UPS is laying off because of the loss of the Amazon.
Amazon, yeah, exactly. No, I know, a big part of it was because of the Amazon and they're going now with smaller companies, which is great.
Right.
And I think they said, given the uncertainty, it's probably a really good time to start laying off. But you're right. A lot of that was business related because they lost that deal. I think FedEx lost that deal last year, right?
Yep.
It's a really good business venture to have.
Yeah.
But with Amazon, clearly they make a lot of money just on my doorstep. But, any questions? That was everything I prepared to talk about. But overall, I think that diversification in your asset allocation is really protecting you. I think the year-to-date number so far, and we'll continue to be watching it. And then when we come in June, we're really going to look at, is there opportunities for a little bit more active management? That's your decision. You have passive, 50% passive. Our active funds and equity have done really well. We may look at alternatives because they continue to add that diversification. So it'll be a good dialogue just to see, how the portfolio is done, the projections going forward to see how that impacts the pension plan and that's pretty all.
So right now, and most recently, we moved from 90% passive to 50%.
So your last
Yeah. Can you provide updates on the decisions that the active managers are making?
Yeah, so our managers, I don't bring them specifically, but I talk verbally. There's been a couple of our international managers. So again, we're saying stay strategic in the long term, but a number of them have been looking. So some of our large cap managers who are intentionally underweight about 57 are buying a little bit because they were reaching down so bad, right? So there's still strong companies with strong balance sheets. So there was some slight buying there. Our international managers were being very cautious of companies that are affected by trade. Their auto industry, I think, is the best example of what's, about uncertainty, right? Given, I think the administration does cause some additional tariffs on the existing ones, and that really helped the auto industry. But there has been some, Kia was one that we pulled back on a little bit because there was a little bit of impact with that. So those are some of the trades Within our fixed income, our managers have been very defensive, so they're going to more quality names in fixed income. I think that's a better opportunity to get return. So those are the type of things that are happening in the portfolio. So some are putting on more risk because I think it's a great time to do that, given the valuations, and others are pulling back a little bit. But that's the value in your solution, because you have those managers who are being active, we're overseeing them so we can see the trades they're making. But yet from an asset allocation, which is the most important thing, when you think about the spring, when you look at the asset allocation, you know, we can talk about funds, we can talk about securities, but a full spectrum of where you're allocated across asset classes will really prove to be beneficial in your returns over the long term to get your
Questions? Thank you. I appreciate it. No other topics on the agenda. I'll make a motion to adjourn the May 1st, 2025 meeting of the Montgomery County Employees Retirement Board. Is there a second? Seconded by Commissioner DeBello. Any board comments? All in favor?
Aye.
Aye.
I
Meetings adjourned.